Bloomberg Audio Studios. Podcasts, radio, news. Bloomberg Tech is live from coast to coast with Caroline Hyde in New York and Ed Ludlow in San Francisco.
This is Bloomberg Tech. Coming up, OpenAI raises $110 billion with key Amazon backing in a deal that values the startup at $730 billion. Plus, Anthropic's dispute with the Pentagon intensifies over safeguards around the use of its AI technology. And Block plans to cut close to half of its entire workforce in a move the company describes as a bet on AI. But first, we check in on these markets that have a lot more to digest than just AI on the day. We're off by 0.4%. The NASDAQ, investors trying to navigate what has been a pretty brutal month. Yes, there's anxiety over AI capex spending. Yes, there's worry about where on inflationary pressures are going. The PPI data today showing that maybe the Fed can't cut as much as the market had wanted. But there's also geopolitical risk, Iran, US, front and center. Let's look at what we're doing over the course of the month. Because remember, we are winding up February, and it means we've had the worst month for the NASDAQ 100 and for the S&P 500 since March of last year. We're off by more than 3.8%. Move on and have individual companies in your line of sight today, because the key story is a private and a public market one. I'm looking at what's happening to Amazon. We're up 0.4%. It is going to be supplying $50 billion to OpenAI in terms of its latest funding round. Does that come in compute? Does that come in terms of really focused access to OpenAI's own agents? We're looking at Nvidia off by 1.8%. What does it mean for their GPUs? But they're throwing in $30 billion as well. So too is SoftBank. Let's get more details. Seth Fiegerman is with us, I'm pleased to say. And what's so interesting is this deepening intertwine between OpenAI and Amazon. What do you make of it?
Yeah, I mean, it's really telling. I think it's another example for us that it takes all parties now to meet the needs of AI and AI cloud computing. Amazon obviously has been a longtime supporter of OpenAI rival Anthropic, but increasingly OpenAI and Anthropic and Amazon have brokered cloud computing deals as part of this one. In addition to the money that Amazon is committing, OpenAI will be using Amazon's Trainian chips, which is certainly a vote of confidence in Amazon's technology, and they'll be working together on AI models that might be useful for Amazon specifically. So again, Google, Amazon, Microsoft, Nvidia, they're all kind of backing everyone right now to lift up the wider AI market.
It's interesting, therefore, that maybe Nvidia is down a little bit on the day, throwing money into OpenAI, but maybe people worry if there's more dependence on Trainium and Amazon chips, maybe less dependence on GPUs. What's so interesting as well is OpenAI says the funding round isn't over. They're also tapping venture capitalists coming forward.
Yeah, it's our understanding that there's still billions more to go here, though I think the majority of it is now done and committed. And so that next tranche of it might come from venture firms and from sovereign funds, with our expectation that this will all be wrapped up this quarter.
What's been also notable is how maybe some of the PR mood music that had been so all-consumed with OpenAI and its prowess had slightly shifted to the alternatives. Anthropic had been leading a lot of the charge in terms of unveils to the enterprise. How much is OpenAI now able to refocus, to talk up its coding tools, to be able to talk up its penetration into the enterprise?
Well, certainly, first off, this is a vote of confidence in OpenAI. I mean, keep in mind that during the months that they've been working on this deal, I think there's been heightened concerns on Wall Street about CapEx spending, with OpenAI really at the center of a lot of that. An unprofitable startup committing to spend more than $1 trillion on infrastructure, and yet they still are on the cusp of raising the largest funding round in history. Now, to your point, OpenAI has, like Anthropic, been investing heavily in AI coding tools, AI agents, and working to help enterprises figure out how to make the most of its existing AI technology. I think we should just expect them to double down on that in the run-up to what will likely be an IPO.
Bloomberg, Seth Fiegerman, we so appreciate the roundup. Thank you. Let's get the markets take. JP Morgan Asset Management Global Market Strategist Stephanie Aliaga is here with us. Stephanie, this is once again shining a light on the extraordinary capital expenditure that is necessary for these frontier labs.
It absolutely is. And I think it comes on the heels of this agentic boom that markets are really beginning to take issue with. And the reality is the reason why these agents are so phenomenal is because they think longer. The amount of inference required in these agents is magnitudes larger than the kind of single query just prompting an LLM of the past. So, the economics around AI continue to mount. We heard that from Nvidia this week. I think for the markets, there's just still this lingering anxiety of, okay, yes, we need a lot lot of infrastructure, but who's going to make money on all of this? And where are the competitive moats actually going to stick in this rollout? And then, of course, what does this mean for some of the companies that may be privy to disruption?
Well, before we get there, I want to go to Nvidia, because it was sort of extraordinary that it's down today and yesterday on the back of such strong fundamental numbers that it posted. How do you interpret that market shake off of it?
I mean, part of it is we've all become, tiger parents, and we're used to exceptional results. It's not enough. We're now more concerned about, okay, moving forward, we got to see some kind of moderation in these growth rates, given just how remarkable that they've been for so long. I think markets are thinking about that. I think on the other side, there's also this desire to diversify, perhaps exposure to some of these AI names, and that's really where we're seeing caution really emerging in markets.
I have to say, our producer made the tiger parent analogy and joke yesterday. I'm loving it.
I love it.
We all expect more and more and more. But what's interesting is whether or not we're starting to expect more of software. Now, I spoke to the Intuit CEO yesterday after their numbers came out. And Sasan has been talking about the disappointment he's had in the sell-off of his stock, the worries that they've had about really their growth rates not supporting some of the decimation in the market capitalization of this business. And they feel that people are adopting Intuit, and they are striking these partnerships with Anthropic and OpenAI, and they're like, the software concerns, and there we have him saying it's very hard to disprove a negative. Yeah. How are you thinking about the market worrying about software and its ability to weather this AI disruption?
Yeah, I think it's rational to price in a greater degree of uncertainty around the sustainability of earnings growth, but I think markets may be getting a little ahead of themselves, and there is almost some misunderstanding, I think, around how transformative or how disruptive these tools are.
Isn't the market meant to get ahead of itself, though?
That's true, and it makes sense to sell first and ask questions later, but now it's time for a more nuanced discussion around what these tools are going to do, because these plugins themselves don't disrupt businesses. It's about what you use those plugins to do. Who is leaning into AI to provide AI-empowered services to bolster competitive moats, to do more? And the other thing, crossing headlines today is around labor disruption. And I'll say, companies that are thinking about how they use AI to substitute their workers, they're missing the forest of the trees here. The real transformative impact from AI is what you can do to do more, to do faster, to build better, to do things that you wouldn't have done before, and ultimately outrun your competition in doing so.
We are going to be discussing Block at length in a moment, but I'm assuming that's exactly where you're pointing, the fact that Jack Dorsey has admitted he overhired, and in some ways has been rectifying and rebalancing Block from a personnel perspective. But he is saying, I am late, and we are going all in on AI, and other companies are going to follow. Are there other companies to follow who are bloated, who do need to rectify and are going to use AI as a good excuse?
I think the reality is AI is going to create a lot of transformation in work. And that transformation could at times look like layoffs in some areas. But I think over the medium term, we're going to see all sorts of job creation too.
Really? Like what? Because we all keep talking about prompt engineering. Well, that's sort of a thing of the past.
It is a thing of the past. Well, one of the things is, look, these agents can create a whole bunch of work. They can automate processes, but the amount of work that they can reliably automate relative to what a human worker does in a services-oriented economy is still a fraction. I should add, and all of these, our listeners should know, hallucination rates for the current frontier models still range between 26% and 80%. Whatever frontier model you're using, Claude, Gemini, ChatGPT, they're still getting things wrong. There is still a real layer here of human oversight. And the thing is, the need for human oversight only compounds when now we're talking about a lot more product, a lot more output, because AI is helping us achieve that.
It's interesting because of late, I think there's been pushback on the hallucinations that are happening at the very cutting edge models. And yes, that might be a thing of the past. So I'd love to dig into that data that you're still seeing maybe up to 80%. More broadly, how are you thinking about the macro impact and whether or not we will see a Fed that's able to tackle this in any way or not?
Yeah, it's a challenge. And that's some artificial analysis. For the Fed, it's a challenge. Right now, you see there's a little bit warmer inflation right now. We kind of know what's contributing to that. It's tariffs. Maybe we can see through that. And I was just in D.C. earlier this week hearing from a bunch of these Fed governors. And there is a range of opinions here, but I think the reality is the Fed is very data data dependent. And right now in the hard data, you still see very, very early impacts of AI labor disruption. Over the medium to long term, there are, I think, some big questions. I think we have to rely on, I guess, what history has told us, and then ultimately the fact that yes, we're all amazed at the exponential growth of the technology at the frontier, but the diffusion in the real economy isn't exponential. It's linear, it's going to be jagged. That's going to give us time, it's going to give policymakers time to adjust.
Stephanie, thank you for helping push us forward. Stephanie Aliaga of JP Morgan Asset Management. Now coming up, Anthropic rejects the Pentagon's latest offer in a dispute over AI safeguards. All the details coming next. This is Bloomberg Tech.
I offered more talks. If so long as they're in good faith, we're always open to talks, and we set a deadline, and we met the deadline. And up until that deadline, I'm open to more talks, and I told them so.
Emil Michael there, Under Secretary of Defense for Research and Engineering, after Anthropic rejected the Pentagon's latest offer in a dispute over safeguards around the use of its AI technology by the US military. Now, Anthropic CEO said, quote, "We cannot, in good conscience, accede to their request." And now, well, the deadline for any further talks is fast approaching. Bloomberg's tech and industrial policy reporter Maggie Eastland joins us for more. It's fast approaching. It's 5 p.m. New York time, Washington time, Maggie. What can be done until then?
Exactly. So look, the rhetoric here has been rather intense. You see Emil Michael, the Pentagon undersecretary, accusing Dario Amodei of having a God complex last night. You see Dario continuing to say that we need these two safety guardrails. And those guardrails are no autonomous strikes without a human in the loop and no surveillance of U.S. citizens. And without that, he doesn't seem willing to budge. So definitely these two sides are staring each other down. And we're going to find out at 5 p.m. who's willing to blink.
We're also seeing coalitions of workers who are employees at Amazon, at Google, at Microsoft, and OpenAI also asking their companies to join Anthropic in refusing to comply with the Defense Department demands. Maggie, what is the argument coming, not only from Emil Michael saying he's got a God complex and actually calling him a liar, but what are the legal protections already in place?
Right. So the Pentagon has said, look, according to the Constitution, according to U.S. law, the U.S. is not allowed to have domestic surveillance over its own citizens. Now, Anthropic's take on that is actually that AI might propose some new legal ground where there are situations where just due to the sheer power of artificial intelligence to aggregate public data, it could lead to new surveillance use cases under which the law isn't clear. So there's definitely some semantics going on here. At the same time, these are real sort of life and death questions about how the U.S. wants the AI tools to be used for warfare.
Maggie Eastland, your reporting throughout has been stellar. Thank you very much for joining us on it. Look, let's continue the conversation. Sarah Krebs is with us, Director of the Tech Policy Institute over at Cornell University. And you're at the intersection of how national security, geopolitics, and tech policy intertwine. This is Anthropic having to lead the charge here in many ways. They're the only one who've got this sort of relationship with the Pentagon thus far. What do you make of Dario's pushback?
Yeah, and I think we should take a step back and acknowledge why they're at no pun intended, the tip of the spear here with the Pentagon, which is that a year or so ago, they seemed to go in the direction of focusing on enterprise, and what that more than a year ago, because their first contract with Palantir was in 2024. And so that's the market they're going for. And so they were part of, $200 million contracts with Palantir and the Pentagon, in part of that enterprise kind of business that they're focusing on. And so as part of that enters them into this arrangement that I think has then led to where we are now, which is this standoff in terms of how they balance their kind of ethical constitution with the need to be doing enterprise work that will bring in the revenue.
There is a lot at stake, because it's not only just a $200 million contract of work that Anthropic has, but there's almost a threat coming from the Pentagon that if you don't abide by our rules, we're going to say that you're a supply chain issue, and lots of other military-related companies are not going to be able to use your models in the future. How much of a problem would that be for Anthropic? How much are you surprised by the Pentagon's focus there?
Well, I think there are definitely two sides of this story. So what I think makes this generative AI so different from bombs and bullets and nuclear weapons is that nuclear weapons, a missile silo only has one purpose, and it was built by defense contractors. The cutting edge AI is coming out of the civilian world, and it's a classic dual use technology problem, which is it's starting in a civilian space and now it's getting appropriated and used by the Pentagon. And so it's a civilian technology that now has this critical national security, value. And so that's where this tension is, that both sides are correct, but the Pentagon does have a lot of leverage because it's the federal government.
It's the federal government, and we've been hearing from the federal government. I just want to hear a little bit more from Undersecretary Michael as what he told Bloomberg earlier today. Just take a listen.
We've been negotiating in good faith on the Department of War side for about 3 months, and we're working pretty diligently. And we sent over a proposal that we thought made a lot of concessions to the language that Anthropic wanted. And then, without any notice, they published an article where we thought we were getting close, saying that they were breaking off talks well before the deadline, which is generally not good partner-oriented practice, if you will.
And look, Anthropic in return has said that while the Pentagon's latest proposal fell short, the company continues to negotiate with defense officials and remains committed to working with the military, Sarah. So when you think more broadly, and this is an echo of what happened with Google years ago, how do you think tech policy can be written by the Pentagon, by the government, to fit current purposes?
It is surprising that we're seeing this repeat of 2018, where Google and the CEO seem to have been blindsided by the employees' reluctance to work with the Pentagon. And here we are 8 years later, and it seems like a repeat of this that could have been avoided. But I think if we put ourselves in the position of how quickly AI has been moving in the last couple of years, you can see how this just becomes kind of a somehow new territory, even though it feels like we've been here before. And so I think what was happening the last year or two, AI was moving so quickly. The Pentagon is moving quickly, trying to do things differently. And you can see then why, and I worked in the acquisition business in the Air Force, and there was always this question, why can't we move faster? This is why you can't move faster, is because things with the federal government and national security and classified work and removing leaders from Venezuela are just not the same as coming up with a grocery list for yourself at home with ChatGPT, or in this case, Claude.
Dario Amodei has been very clear that he thinks more about the implications of a grocery list, and he's written about the adolescence of technology writ large at the beginning of this year, thinking about the geopolitical implications, the implications for ethics, for our world of work going forward, Sarah. Just tell us a little bit about where you think there might be any room for agreement. Can the Pentagon go as far as to agree, as with Dario Amodei's desire, to not have surveillance of US citizens or not use models for autonomous lethal strikes without a human in the loop? Is that ever something that they could be specific enough about?
I think it's a great question, and I think that's the reluctance of Anthropic, which is that the U.S. has been saying all we want is to use AI, use Claude for any lawful use, and it's not lawful to use autonomous weapons, and it's not lawful to do mass surveillance. So what's the problem here? I think the worry, probably from the perspective of Anthropic, is that slippery slope. What does it mean to be fully autonomous? What does it mean to do mass surveillance? And so I think that's what they think is gray area that they want to be very careful about. And I think the view has been that they would rather be trying to influence safe use of AI from the inside rather than take a sanctimonious, perspective and be on the outside and not be able to influence the implementation and deployment of AI. And so I think that's what they're trying to do. And so for Anthropic's leverage, I think, is that their model is really good and that the Pentagon wants to use it. So my expectation would be that they probably will find some middle ground here before 5 p.m. today.
Sarah Krebs of the Tech Policy Institute at Cornell University, we thank you very much indeed. Now, we just want to bring you some breaking news from a Trump post on Truth Social. So President Trump posting about an FTC letter to Apple. Now, Trump is posting an FTC letter to Apple on Apple News' political actions. The FTC wrote to Apple on February the 12th regarding Apple News. We're off by 1.6%. We'll bring you any further details regarding that post. It is just simply a post of what the FTC has written to the CEO, Tim Cook, and the fact that it's the nation's consumer protection agency responsible for protecting the American consumer, and they're looking to look Apple News as one of Apple's many products and services. Coming up, the Hollywood drama to buy Warner Brothers reaches its climax, but as Netflix bows out, the story isn't over. More on that next. This is Bloomberg Tech. Netflix has dropped its bid for Warner Brothers Discovery, clearing the way for Paramount Skydance to clinch its deal for the home of Bugs Bunny and Superman. Now, in a statement, Netflix's co-CEO said the price to match Paramount had gotten too high, and investors rewarding that move. Just check out the shares. And let's get the details with Bloomberg's Lucas Shaw, who leads our entertainment coverage. Did it come as a surprise?
The speed with which Netflix pulled out came as a surprise. You know, there'd been a growing suspicion over the last week that this was tilting, right? Warner Brothers had selected the Netflix bid in December. Over the last couple of months, Paramount had waged this campaign to change it. For most of that time, it still seemed like Netflix was the clear front runner. But over the last week, Paramount made a bid that Warner Brothers thought was better, and people started to get the feeling that that Netflix was having second thoughts. But I think the speed with which it all came together on Thursday was a real surprise. And
it came straight after the meeting at the White House with Ted Sarandos. Can we interpret anything from a political perspective?
Look, I think the political pressure that Paramount brought to bear definitely had an influence. It made a lot of Warner Brothers shareholders believe that the Netflix deal was going to take a long time and be more complicated and maybe be more interested in the Paramount deal. But I wouldn't read too much into the meeting just yesterday. I don't think it's like Ted Sarandos walked into the White House, came away saying, oh, we can't do it, and then pulled out. I think Netflix had been sort of building to this point for a little while.
And now all eyes on the Ellisons and what's next. Lucas Shaw, thank you so much for jumping on that news. Meanwhile, coming up, Jack Dorsey announces huge job cuts over at Block as the fintech makes a big bet on AI. But is AI really the only catalyst for these job cuts at Block? More on that next. This is Bloomberg Tech. Welcome back to Bloomberg Tech. Checking in on these markets, checking in on individual names that are to the downside after earnings. This time it's CoreWeave, off by 19%. We haven't seen this sort of fall in 6 months for the NeoCloud. And this is as their capital expenditure continues to balloon to $30 to $35 billion for the year. That was more than the market had anticipated. They're also posting a bigger loss than had been thought, even though revenue did climb. Look, again, Michael Intrater, the CEO, saying this is our business model. We build because we've already got the orders from the likes of Microsoft, from the likes of other key cloud demand and GPU demanders, but for now the market still wants more proof point and we're lower. Let's move on to some individual names also on the move. On the back of that big private market deal, I'm looking at what's happening to the points of Nvidia. We're off by 3 points, we're down by 2% for the giant. Yes, second day running that we're on the downside after its earnings, but crucially it's putting $30 billion of its own money into OpenAI. Now, does that come in the form of GPUs? We get to understand, but really this is as we understand that we are going to see Amazon lent on more by OpenAI as they put $50 billion into this $110 billion funding round for OpenAI. Does that mean that we're dependent less on Nvidia, more on Amazon's own chips and cloud? Certainly Microsoft to the downside as people start to interpret that relationship between OpenAI and Microsoft is continuing to untangle. We can talk more about CapEx and the likes with Bloomberg Equities reporter Ryan Vestelica, who you've been singling out ultimately how cheap Nvidia has become. But after its earnings, we are still trying to find the proof point that it still is going to dominate market share like it always has. Maybe this deal with OpenAI and Amazon showing that perhaps we can't depend on that so much?
Hey, good morning. Thanks for having me. Yeah, I'd say that's become a growing concern. So even though Nvidia continues to grow pretty rapidly, its multiple is getting pretty cheap, we are seeing a number of competitors, including its own customers, showing pretty good success with their own internal chip offerings. Obviously, we have Alphabet with its TPU chips. You mentioned Amazon this morning and the deal that they had with OpenAI. This just shows that even though Nvidia looks like the results and their just overall trends are pretty positive there, you still have a lot of concern about how sustainable is this, what is competition going to look like, and what does all that mean for how we should be interpreting the stock's prospects, especially as we look out over the longer term.
I mean, extraordinary, because Nvidia posted more than 70% growth in revenue, said that it's going to be accelerating into its fiscal quarter that we're currently in, Ryan, at the moment. But this ongoing AI capex uncertainty is also running at the same time as we've got the software uncertainty as well. What is it that the market needs to hear to galvanize some support?
That is a great question, because it really does seem like no matter what part of the market you're looking at, when it comes to AI, it seems like there's just sort of growing concerns everywhere. I mean, you mentioned CoreWeave not too long ago, another company that's spending very aggressively. And while they're also showing pretty good growth, people are skeptical. How much is this spending going to pay off? When are we going to start to see more pronounced returns from it? What is the impact all this is having on earnings and cash flow and so forth? Major concerns out there. Then software is a little bit of a separate issue, but at the same time, you have this sort of growing adoption of AI. You have sort of improved efficiency of these models and more capabilities. What does this mean for sort of traditional vendors? And we did get some mixed results out of the software group this week. Companies like Salesforce, Intuit, Autodesk, all these companies coming out, painting sort of a mixed picture. I think I'll just flag Duolingo. So maybe a little bit of a separate thing here, but the language learning software company, that stock is plummeting today because they gave a weaker than expected outlook. And that looks like one where people are just sort of looking and saying, like, what is the demand for this kind of service going to be in a world where we have AI providing auto translation sort of services out there? So that is just sort of, I think, indicative of just the growing concern and fear out there.
Duolingo off by 15% at the moment. Ryan Veselika, thanks for bringing us that one. Look, as we think about how powerful these models have become, just take a look at the two-day chart of Block shares. We got that huge spike coming after the company, which owns Square and Cash App, told shareholders it plans to cut almost half of its workforce. Why? AI. Let's talk about it with Bloomberg FinTech reporter Emily Mason. And there is a lot of hand-wringing as to whether this is AI washing or actual AI productivity, Emily. But first of all, give us the facts. What did Jack Dorsey announce?
I mean, he is really saying that this is driven by AI. They've made a lot of investments in their internal tools like Goose, which are meant to help employees across the board operate more efficiently. So they were really trying to communicate that this is coming from a position of strength and that, you know, it's a bet on AI making them more efficient. I think they're getting a lot of skepticism that, you know, they hired really aggressively over COVID and similar to a lot of their peers, and, you know, maybe they needed to reduce some bloat.
When they say a position of strength, I think the CFO was talking about how they've seen more than 20% growth in their gross profit for the quarter they just talked about. Here's Jack Dorsey discussing how they did overhire in COVID. He admitted that. But they also feel that they've been pretty well run. That's something that I've been hearing echoed by analysts as well, that compared to other payment companies, actually they're pretty profitable on a per employee basis. On a one-year basis, it's been more volatile for the stock. So Emily, paint us as to what the reaction is going to be like internally and how you actually let go of that many people. 4,000 all in one shot.
I mean, that's part of what made it so surprising, right? Is like, it's not totally clear what pushed them to make such a dramatic change if they are performing so well. They're really trying to like increase their product velocity to keep up with competitors. I think people feel like they've done a good job of that, catching up with Toast as far as feature parity for serving restaurants, which has been a focus area for them on the Square side. So I think that's kind of where they are, and they're hoping to just continue on that trajectory. They've made a lot of restructuring changes to kind of operate more efficiently. They've gotten rid of a lot of middle management people. And I think part of a question I have is like, is this the culmination of that? Like, are they now happy with their organizational structure, and are they going to be able to just execute without restructuring anymore?
And that was the argument. Don't have wave after wave. Just do it once and do it efficiently, shall we say. But still, this is a human story. Emily Mason, thanks for bringing it to us from Block. And therefore, let's get you the wider human picture here as it intertwines with AI. JP Gounder's with us. He's Vice President and Principal Analyst at Future of Work team at the research firm Forrester. You've been writing a lot about the potential for AI washing, for companies to blame AI and technology for job cuts. But what do you interpret Block as?
I think it's a story in part potentially of AI washing. AI washing is incredibly pervasive right now. After all, if you lay people off and you say, well, we've just become so much more productive because of AI, it makes you sound innovative, it makes you sound in control. But the truth of the matter is that Block does, as you've pointed out, have some other problems. They're down 75% from their record high, all-time high of stock, but they also did overhire during COVID, and that can't be overlooked. I will say this, in the tech sector, when you have a software developer-centric kind of organization, there is more potential for using AI to fill in for productivity because coding is moving in the direction of becoming very much generated by AI.
What caught my attention when I first read the post yesterday from Jack Dorsey was he was saying, I'm late, I'm not early. Others are going to copy me now. Do you think there's going to be a copycat effect here, particularly from software, from tech companies that are at the cutting edge of using the latest, greatest frontier models?
Probably. I mean, there have been quite a few tech layoffs, including of developers from some of the biggest firms in the world. We've seen Amazon lay off 30,000 employees over the last few months, and it will be happening everywhere. But again, all of these companies were in a war for talent during COVID, and they were kind of hiring everyone they could get their hands on who had talent. Now, these newer tools that allow software developers to generate code at a much faster pace, well, it does change the economics a bit.
But there's still a war for talent, just a different kind of war for talent. And so I'm interested as to who, therefore, these companies are fighting to hire and who gets let's go in this scenario.
Right. Well, look, I think what we saw that was different during COVID is even relatively junior developers were being snapped up, people straight out of college. And right now, we know that junior talent is suffering in the job market. Very qualified people find it hard to get on that first rung of the career ladder. Who they're fighting over are really the leading edge AI experts and people with a lot of, hardcore AI experience who are really adept at using these tools in a variety of ways and who have proven that they could drive some business value because we know that ROI remains relatively elusive with AI writ large.
At the end of the day, scapegoating or not, job cuts are still occurring. JP, push us forward as to what the future of work in your mind's eye actually does look like. The reason this Block announcement had such an impact is because it comes on the back of a week where we had the Citrini research to kick it off, when we all had this angst about what a dystopian 2 years' time looks like with 10% unemployment. Is that what you're thinking is a reality?
So at Forrester, we have a forecast. We believe that by 2030, that AI and automation will take about 10 million jobs out of the U.S. economy, which is about 160 million jobs. So that's about 6.1%. That is nothing to sneeze at. There's real human pain involved there. But it's not the apocalypse that some people are talking about. We believe that usually AI is augmenting rather than effectively replacing people. And if you look beneath the covers, MIT did a study, 95% of companies have yet to see any tangible return on investment in a financial sense from all the AI investments they've been making over the last few years. So we have a sober look. It will have an impact. 10 million jobs is not nothing, but it is hardly the apocalypse.
Will it create jobs, JP?
Yeah, there are definitely some new categories, at least of skills that are necessary. I mean, did you ever hear of a prompt engineer 3 years ago?
I know, but are they still needed? I thought that was last year's issue.
It certainly was, and now we're moving to who's good at agentic AI. But those agents still base their actions on a lot of prompting. So prompting hasn't quite gone away to the degree that people would lead you to believe, but we are indeed moving toward a more agentic world.
JP Gounder, it's great to connect with you today of Forrester. Thank you for the thought leadership. Look, coming up, 13%. That's the amount the global smartphone market could shrink this year. More on that IDC number next. This is Bloomberg Tech. A new report from IDC says the global memory crunch will lead to a historic contraction in the smartphone market. Nabila Popal, Senior Research Director at IDC, joins us to discuss this next. You call it a crisis like no other. What's driving it? Purely the fact that we all need memory for data centers?
Absolutely. I mean, and it is like no other, because we've been through the pandemic, we've been through a really volatile year just now, like with the tariffs, and we still didn't see a drop like this, right? So this is completely different situation, and essentially there is just not enough memory for the players that need it, and given that how many different products we need memory in, right? So that's what's essentially creating the crunch. But more importantly, it's not just about the drop now and then the market will recover. It's about what makes this really different and much more dire for the industry. It's how this is going to create a permanent change, a structural reset of the entire industry, both in terms of TAM. So just this year, we're looking at about 160 million units wiped off the market. But even when it starts to recover, which as of our assumptions, the situation would stabilize somewhat mid-27, and we're starting to go in positive growth territory. But you're still looking at, close to 160 million off the TAM. So throughout our forecast, we're not expecting the TAM to get back to prior, 2025 levels.
Right.
But within that, again...
Can I jump in on that, TAM? Why will it be so long-term diminished?
So essentially, the reason for the drop is how the change in the competitive landscape is gonna the impact that's gonna take. So where is that 160 million coming from? It's the prices of the memory, right? And why we keep saying, the prices of the memory that has shot up to even 300% from what they were last year, and they're continuing to go higher. Memory that used to contribute to about 20% of a smartphone BOM cost is now anywhere, tripling that. So imagine a smartphone that is below $100. If the memory cost used to be $15, $20, and if that's tripled, it's essentially making below $100, $150 smartphones uneconomical to make anymore. So those OEMs, and there are a lot of, Android OEMs operating in that space with majority of their portfolio, some with 90% of the portfolio below that. Those are the ones that are at extreme risk. Not to say that anyone is immune. Even the larger players like Apple and Samsung are going to face higher memory prices, but at least they are able to secure the supply. And when they get the supply, or at least majority of it, they can afford those higher prices, right? Because their devices have larger margins. It's really those lower end Android players that are already operating on razor thin margins that simply not going to be able to make those phones, those below $150 phones.
So it feels, Nabila, like it's the emerging markets that are going to be hit the most in terms of end demand, in terms of lower cost phones. Can we not innovate our way out of this?
I would, and I think I said that earlier to someone, that we are, this is going to be a time of survival of the fittest, where of course, the larger players are going to be able to secure their supply and leverage their margins to be able to absorb some of the costs. But we always see, right, at times of crisis is when the biggest innovations come out, right? So, we're curious to see, and we're already hearing of some of the lower OEMs either resorting to use devices to get the RAM from that, and memory from older phones. But we still don't think it'll be enough to avert the drop that we're seeing. The other strategy, a mitigation strategy that they're thinking about or going to leverage, is that they're going to try to move up in price segments, right? So target above $200 phones. But again, the challenge there is that demand there is going to be very sensitive, because one, there's going to be so much increased competition from more established players in those price segments that it's going to be really hard for the low end, below $100 brands to be able to get demand or consumers to buy their devices above 200. So even though they're being ambitious, I think it's going to be a big challenge to operate at the same volume at higher price segments. So, that brings me to my other point. We're not only looking at a full competitive landscape change where many players exit and, share change between the larger players that are remaining, but also a complete product mix shift of the industry that is going to last for a long time. Because even when the crisis stabilizes and memory prices go down slightly, they're not going to go back to prior levels. So it's almost never, permanently uneconomical to make those sub $100, $150 devices.
So are we going to be keeping our phones? Are we going to be keeping our phones for longer, Nabila? That was already a trend.
Yes, exactly. So the consumers that are not going to be able to afford those higher price segments or higher prices, which are across the board, not just on low end, some are going to end up resorting to keeping their devices longer or resorting to the used market. So there's just so many dynamics at play, and we're eager to see how OEMs and consumers adapt. But it's going to be a very challenging couple of years.
Nabila Popel, it was fascinating research, Senior Research Director at IDC. Thank you. Coming up, a new way to start your weekend. Bloomberg TV is launching Bloomberg This Weekend. Co-host David Gura is going to be joining us for a preview. This is Bloomberg Tech. NASA shaking up its Artemis mission to the moon. The space agency decided to cancel a multi-billion-dollar Boeing upgrade to the Centerpiece Space Launch System rocket and is slotting in a test fighter flight closer to Earth as the program remains beset by delays and coast overruns. Now, even with this latest turn of events, NASA insists the 2028 deadline for a lunar touchdown remains unchanged. Meanwhile, there is something changing at Bloomberg TV, unveiling a brand new show to start your weekend, Bloomberg This Weekend. Joining us is the program's co-host, David Gura, one of three, and a whole team behind it. David, I have a feeling you might be talking some tech stuff this weekend.
Indeed we will. So there'll be plenty of tech stuff. Certainly watching what's been happening with the Pentagon and Anthropic, and also the private credit story continues to be roiling as well. So I think it highlights why we're doing this program. That is, it doesn't seem like everything is contained in a Monday through Friday week anymore. It seems like it starts to build even more at the tail end of Friday going into the weekend. So between that, what's happening in tech, private credit, and then of course what's happening in geopolitics, I think it has the makings for a very busy launch weekend for us.
I blame crypto.
Yes,
but
fair enough.
they started their throughout the weekend vibes. But what we like to do on a weekend is maybe digest in a different way.
Yeah.
It's kind of a sit-back approach rather than a lean in. Is that kind of the style of the program?
That is definitely the plan. And of course, if something major happens, we will change course and accommodate that and cover the live news very capably with all of our colleagues around the world. But having done this once before, hosted a weekend show, I know that the importance of it centers largely on being able to exhale at the end of the week. Think about what's happened on Saturday, maybe have some longer conversations about themes that have developed over the course of the week, and then on Sunday kind of position everyone for the week ahead, set the table for that. So it'll be 3 hours, a significant amount of time, but we're on TV, radio, and streaming as well, so folks can kind of listen to the show as they move about their day. They don't have to be stationary in front of the television or the radio to do it.
I mean, I really feel like the themes that have engulfed this week, in many ways, are the themes that continue from our tech audience perspective day in, day out. What does AI mean for the future of work? What does it mean in terms of a dystopian future in 2030 that is articulated on a Substack by Citrini Research that we'd never heard of before? Sorry, Citrini Research. But is that something that you're thinking about? Is that what the audience are asking for as well?
I think so, and there's some plasticity to this. We're at the beginning of the evolution of a lot of these things, and I think that people are very hungry for all kinds of analysis. Yes, the most alarmist and thought-provoking, but I think there are many opportunities when it comes to AI, when it comes to productivity, when it comes to the economy broadly, to kind of sit back and really hear interesting conversation about what people are thinking about, where it's headed, where it might be headed, where it could be headed, and we'll be having those conversations
Guests?
on the show.
Who can we look for?
Let me flag that we'll have the Minority Leader of the House of Representatives, Hakeem Jeffries, on the show tomorrow, and the Democrats have just had a big meeting outside of Washington, D.C., obviously on the heels of the State of the Union. We'll be having a conversation with him about that, the Democratic agenda. Certainly we'll get into tech, talk about Iran as well as we continue to watch what's happening there, and the House prepares to vote on a war powers resolution next week.
Light stuff.
Light stuff. There'll be light fare as well. I don't mean to
David Gura.
worry people.
There'll be some laughs.
Yes.
I know that with your team. We thank you. To be sure, tune into the premiere of Bloomberg This Weekend. That's tomorrow starting at 7 a.m. Eastern. That does it for this edition of Bloomberg Tech, but keep an eye on some of these stocks. The NASDAQ 100 having its worst week since month, in fact, of March of last year. It's down on the week, it's down on the day. Nvidia off by 2.2%. Amazon without OpenAI $50 billion funding of 110. This is Bloomberg Tech.